All right, here we are. All-time highs before the halving. Who could have thunk it? I know I sure didn't think it was going to happen, but you never know about these things. Bitcoin, if you haven't heard, has made all-time highs on a few exchanges. I'm not sure if it's happened on all of them, but it definitely happened on Coinbase, as 69K was your all-time high. And you can see that candle right there printed a high of 69,324 spot 58. That is all-time high. We got a print of, what was it? 70,195 on the futures. And it's coming off a bit, which, a lot of people are going to take profits up there. That's for sure. Let's go ahead and take a look at the daily time frame and see just how extravagantly overbought this thing is. You can see since 2023, it's just been a straight upside move. Then we got into 2024. We had, a decent sized pullback here. I actually thought we were going to pull back, maybe tried sideways for a little while till we got into the halving and beyond the halving. And then we would see that bullish rip, but unfortunately it happened before. I would say that 90% of that is due to the fact that most of your risk markets are absolutely bid. Well, not today, but they have been absolutely bid. Nvidia just absolutely skyrocketing. Most of your tech stocks skyrocketing. Bitcoin skyrocketing. Everything doing exactly what, no one is expecting, right? Because inflation, the end of the world is nigh and all that stuff. Bitcoin has essentially printed fresh all-time highs before the halving. So congratulations to Miles. I believe he was the first one that was calling for that to happen. I have no understanding as to why, but he got it. There you go. It happened. Here's the halving over here. So yeah, congrats. Good call, bro. All right. So what are we looking for from here? Well, it depends on how heavy the sell side is up there. Bitcoin could absolutely just stay within yesterday's range and continue to go higher, or it could absolutely pull back. We don't know. We'll have to wait and see. I took an entry here based on a 4-hour supplies back last week. That trade worked out pretty damn good. So I just closed that position at the highs because I only had a small position left on it. Naturally, my hodl bags are looking really good. Got a massive, position in Bitcoin just setting in a cold storage wallet or a few cold storage wallets. But yeah, there you go. So everybody's happy now. Everybody's rich again. Woohoo! All right. So moving forward, there are some other things that we need to talk about. Gold is about to breach its all-time high, which, it did breach and make a fresh all-time high in December 2023, which wasn't that long ago. You could see nice little consolidation formation here, trading right under the yearly opening range with 1, 2, 3 tests. Then we printed this bear trap down here and then breakout. So once we broke out above, I took a couple positions and I was telling people inside of the channel members live stream on Sunday that we were watching two stocks here that, you know, you could have bought anytime, right? Because I basically had bought on this day right here. And I was just like, you know, if gold's going to break out and make fresh all-time highs, if it could get a run, these two stocks could absolutely run. Which one of them being AEM and the other one, Anglo Gold. Shanti, it's doing okay. It's not doing near as good as the other one today, but, you know, it is still doing good. So I bought it down here, like once we broke above the yearly opening range. I purchased it Friday. So it's up okay. I mean, it's nothing to write home about. I'm just going to hold on to the positions more than likely because gold has not breached that all-time high yet. The rest of the market, however, not faring so well. Here is your ES futures. This is the S&P 500. You can see it's having a pretty vicious down day. You are over 2 standard deviations away from its daily expected move. Basically, what that means is we have headed lower 2 times more than we should have. So, yeah, there's some selling going on. Where is that selling taking place? It's in tech. It's in tech right there. Your biggest 3 top market cap stocks. First one being Microsoft at a little over $3 trillion. And then you got Apple sitting at just under 3 trillion. Well, it's around 2.7 trillion now. And then Nvidia at almost 2 trillion. So you're looking at almost 10 trillion tied up in these 3 companies right there, market cap alone. And Apple has been getting absolutely annihilated. Not sure if you know that. Apple is down on the year. All right. It's literally the only one that is, other than Tesla. Tesla's down on the year as well. Tesla getting hammered. Basically, we were watching this area right here. We were discussing the fact that structurally it's bearish. But if it could continue to gain strength and keep moving higher, then, you know, you could potentially look to buy. Basically, I told everybody to watch this little trend line break right here. If you do break below that trend line, you're going to be structured right back the right way, which is bearish. And you should be looking for puts or put spreads or just sell whatever you want to do. And that trade is taking place. It's working out fantastic as well. Absolutely good stuff going on. One trade that we were watching was PayPal. Unfortunately, I was too busy watching Bitcoin and everything else that I kind of let this one get away from me. We have been looking for shorts on PayPal basically because of the moving average structure. It's obviously bearish. We're flipping back under the 50 there, so that's putting the basically the momentum right back on the bearish side of things. However, a $60 put would be sufficient if you did want to take part in selling this. This white line right here is brutally important as it is weekly support right there. That is your weekly support. That is why you are bouncing there and struggling to break down. Now, this morning it had a huge push up, and I was watching that, so I was thinking to myself, well, this is probably not going to be in play today. And then I quit watching it. However, I mean, if you want to take it, you can. Just understand that there is support right there. I mean, right there. So it would be best if you could get it at around $60. What I mean by that is if it could trade back up to $60 today, which is just right here, maybe then buy the put. And you might make, you know, 40, $50 to the downside there. But if you do breach this support level on the weekly, the next support that I have is all the way down here at 57.47. So you can see that that would be a pretty decent move if it were to take place. So this one's still in play today if you want to look at it. All right, gold. Oh, we did gold. Oil. Well, first, bonds are ripping as well. Yeah, bonds are ripping as well. So that means the TLT is going up, but it's apparently found its high here for the day. Potentially. This thing is still structured bearish, so it's hard for me to buy it. As you can see, we did breach above the 200 exponential and the 200 DMA, which is just the standard simple moving average. In red here, the purple is the exponential, both 200s. We got above it, then we got back below it. Moving average structure stayed bearish, and then we got another pop, and then we came back down. So, I mean, it would literally have to breach this trend line with a daily close before I could look to be a buyer on it. Again, because this does look like a little bit of a bull flag, but at the same time, it's running out of time. Right? Once the flag gets extended beyond the size of the pole, then it's no longer a bull flag pattern wise. But yeah, we'll watch that trend line to see if TLT gets a break above. If it does, we'll probably look to get calls on it or put a call spread on it, whatever. But yeah, that's bonds. Oil. So oil had a breakout. It's still structured bearishly. So this is the thing. If I spread this out, you can see definitely you got your 200 simple above the 200 exponential. That is exactly where it should be in a bearish structure. Okay. And then you got the 100 under the 200 and then the 50 under the 100. So literally the only moving average that isn't saying that this still isn't structured bearish is the 21, which is ripped above the 100. However, you are now starting to see the 100 and the 200 DMA sloping to the upside. So this could bring about some trouble. If oil continues to rip, then that's going to make the headline CPI go up. Remember, every $10 move in oil would be a 0.2% change on the CPI. It would be a higher print. So they could definitely sell oil to keep it lower, especially seeing how this is an election year as well. So, I mean, oil, it did get the breakout, but you can see that retest was deeper than I would wanted it to be if I was looking for long oil positions. But if I pull this back over here, this middle chart down in the bottom is oil, and you can see a lot of freaking volume came in here today. This did reverse and took out this upside candle's low. But now you can see that it's absolutely flying. A lot of bullish volume coming in there on oil. So if this breakout remains, we are going to be looking to buy oil stocks or just get long outright oil by buying calls on the futures contracts. Or you can just trade the futures themselves. Right? Options on futures contracts or just futures contracts. So we'll see how today closes. If today closes bullish, then I will be looking for a retest of 78,447 once again for potential bullish entries on oil. And that would, in fact, I believe, be bad for the S&Ps. So we could then potentially look to buy or buy puts or sell calls. However, we don't want to get ahead of ourselves because there is the bottom edge of the weekly expected move. So we aren't there yet. Remember, when we get down into these areas, we don't necessarily want to be sellers because every time since this market has been bullish, you've gotten a downside breach of the bottom edge of the expected move on the week. Prices have shot back up. Here's another one. You got really close to that bottom edge of the expected move and then price shot back up. Here's a breach of the bottom edge of the expected move and then price shot back up. So like if we get a breach of the expected move, are we going to see price shoot back up? Tomorrow we have Powell will be basically, it's not going to be an FOMC meeting. He's going to be testifying right? He's going to be testifying. I'm not sure in front of who. Probably Congress. Federal Chair Jerome Powell to testify in the economic outlook, recent monetary policies, actions for Joint Economic Committee in Washington, D.C. All right. Yes, I mean, I don't expect him to say anything other than we're keeping an eye on inflation, and inflation is doing what we want it to do, which is go down lower. It's just being a little bit sticky. So, I mean, yeah, right now, this has been a tech-driven market. Everybody knows that it's been a tech-driven market. It simply has been. All right. And now that tech is coming off a bit and your major market caps are coming off a bit, those are the ones that are drastically affecting today's price action. So be very careful. Nvidia, like if this was to come off hard, I think Nvidia is literally the last one propping it up. If we get a big move down on Nvidia, then the rest of it's probably going to come off. If they continue to sell tech, then I would absolutely be interested in buying the TLT. Look at Microsoft today. Remember, this is the biggest market cap stock in the whole S&P 500. It is the biggest by far. I'll show you real quick. There you go. So it's after this move lower, it's actually dropped. It's no longer a $3 trillion market cap. It's now a $2.99 trillion market cap. So pretty massive still. And market cap, you know, you got those three heavyweights there and they're all down. Apple's down big. And that's a huge problem, I think, for the S&Ps. But, you know, they could find support. Google's been getting killed because of, everybody knows, right? If they brought out their new AI thing and then it just literally would not let you ask questions you wanted to ask it. I'm not going to get into all of it, but I'm sure you guys seen the memes all over Twitter. So yeah, that's literally what caused the big sell-off here on that. And then that's just had straight downside continuation from there. Google getting hit pretty damn hard. Google is also over $1 trillion market cap. Meta, not $1 trillion market cap, but also not getting absolutely decimated. And Tesla, no longer $1 trillion market cap. I think it's right around 600 billion, sorry. 600 billion. So yeah, it's getting absolutely wrecked. Tesla's getting hammered hard. This has to do more about X, I believe, than it does Tesla, because basically people were, some bankers were wanting Elon to sell some shares or something to structure the debt a little bit better or whatever, because X does have a lot of debt. So yeah, we'll see how that plays out in the future. But yeah, a lot of fun stuff going on in the markets today. Netflix was absolutely skyrocketing, but it is coming off finally a little bit. Still never made all-time highs, but, you know, also not a massive. This one is not considered a Magnificent 7. I would say it won't be long before Tesla would not be considered a Magnificent either. As long as it keeps getting hammered, you will probably have a Magnificent 6. But these are, the way that I got these is situated is also the size of market cap. So yeah, we were watching Intel for a bounce, and then we got this close below. And unfortunately, I just did not like this move up here to buy it, but I wish I would have. That trade would have paid off yesterday, but that's over and done with. You can see it's coming right back down to support again, which doesn't really fare well. If I was expecting this to have bullish continuation to move higher, I definitely don't want to see a massive pullback all the way back down to the support that it broke and lost, regained, and then go back. That's never really a bullish sign. And if you don't want to play Nvidia bearish, you can play AMD bearish, because AMD is essentially just trading like Nvidia. I mean, literally whatever Nvidia does, AMD's done it. And I think you could put together a call spread or a put spread on AMD pretty cheap. If you use the 192 spot 50 strike. Here, let's do this. So if you used, well, you'd probably want to go out a little bit more in 23 days. But you can see you want to buy the low implied vol and sell the higher implied vol. So this has already changed a lot. So never mind. From the time that I looked at it this morning, we were able to get into the 192.50s and sell that. And it was going to be for less than $1 or around $1.50. It's already getting more expensive. So that means you would need to see AMD get well below 187.50. And 187.50 is right in this area. So that's a pretty good move you'd have to see happen in 23 days in order to get paid on that. But you could put something like that together if you wanted to. If you think that, you know, the markets are all going to pull back now because they have been absolutely overbought for way too long. When I look at overbought, I like to look at the weekly because it really shows you just how overbought these things are. And then, of course, Bitcoin just absolutely insanely overbought. Like, this thing, crazy. But you can see it can stay crazy for a long time as we got the halving coming up, which is typically Bitcoin's biggest bullish driver. Now, a lot of people are going to say this is priced in, the halving, and it's possible. But I would say most of this bullishness is coming from the fact that we got ETFs and now people can get into Bitcoin much cheaper than they used to be able to. Right? And they don't have to run the risk of going offshore. They can stay inshore or onshore. And of course, I'm talking about U.S. citizens, as U.S. citizens are generally. There's the chat. I was wondering what in the world was going on. I couldn't see the chat. Good morning from San Antonio. What's up, everybody? Tony the Fish in the house. What's up? Good morning. Good morning to my first profit yesterday. Awesome. Good stuff. I took 1/3 of my position off of my Bitcoin bags when we hit 35K. Now that those bags are right back up to where they were when I took profits the first time, if not a little bit higher. It's been some time. Yeah, I didn't stream last week. The reason is I wasn't feeling really good, but then when I was going to do the live stream, the internet just was not going to allow me to do it, so I didn't even attempt it. But, you know, I stream when I can. Risk is bid, but rates are still very high and not coming back to zero. Yeah, this is true. This is true. Why is it coming down? Because Bitcoin just hit all-time highs and is coming down. But yeah, I can look at it. I mean, Mara is a very speculative stock. They do not make money. All right? They do not make money. I've brought this up many times. They are in the hole to the tune of like 3 decimal places beyond a million. So like almost $1 billion in the hole. Is their income. So they don't make money. They lose money. So a business like that, usually you wouldn't see a chart going up. You'd usually be going down. But Mara gets a lot of its play from Bitcoin, right? People don't want to, they're like, instead of buying Bitcoin, I can just buy Mara because Mara outperforms. Well, it does outperform Bitcoin to the upside, but it also outperforms Bitcoin to the downside as well. As today, Bitcoin is down a meager 3%, as Mara is down 10%. So, and that's after moving up what looks to be around 10% and then dropping, because it's going to tell you where it's down from yesterday's close. All right, so like, it's been a pretty volatile day on Mara. You do have support pretty much where you are right now, but I think if Bitcoin continues to come off, then Mara will continue to come off as well. All right. Just remember, whenever you're playing Mara and Riot, both, those are both stocks that are broken. And when I mean broken, I mean they simply don't make money. So, like, you would typically want to invest in something that makes money. Like MicroStrategy, for instance, they make money. You can see the income here. It is negative 49.47 mil. And then when you pull up Mara, it's even worse. At 357 mil. Negative 357 mil. Almost $400 million in the hole. That's not really a company you want to invest in, right? Typically. Usually you want to invest in companies that make money, not lose money. So it's just a play on Bitcoin. That's all it is. They get traded because it's cheaper and they move faster. They're more speculative vehicles for the Bitcoin trade. But yeah, it doesn't trade 100% to Bitcoin. All right. As you can see, Mara's been coming down for the last 1, 2, 3, 4 days, 5 days. I mean, this day closed up, but you got downside continuation. So, I mean, Bitcoin, Mara's been coming down 4 days, whereas Bitcoin is just today down. Like, today's down. So, Mara didn't actually get yesterday's huge push. See, Bitcoin had a huge bullish push yesterday. Mara kind of got it, but then sold off at the end of the day. Hopefully that helps you. Yeah, they are with China exposure, and China is not doing so good either. You see BABA. We were looking for BABA to find support right in here. If it doesn't, then we're looking for 70.13 to come into as support. And then obviously China itself. Wait. I've forgotten it. I have it though. Where did it go? Damn it. I bet I put it in indexes. FXI is what it is. There's your China ETF. It's, it got a bounce, but it's coming down a little bit now. But the question is this a buying opportunity? Structurally, with the moving averages and all that, it is not. Like, if you were going to trade this as a trend, you would be selling this. This would be a selling opportunity, not a buying opportunity, but it's still above the 50. So you got to be careful whenever that's the situation, because some algos are driven to just buy on 50 tests. Not all of them, obviously, but if there are algos out there that want to buy the China ETF, then 50 is a good place to look to be a buyer, as it also puts you really close to the 21 exponential. But you can see that you are below it currently. So, I mean, it looks like it's just a short recover rally and then shorts have reapplied, but obviously we won't know until, it either happens or don't. You could trade this rather cheaply with options, and it moves very slowly, so it just gaps a lot. That's the huge problem with this, is because you'll take a position today and it'll either gap down or gap up. but it's not going to gap down or gap up so big that you're going to lose a ton of money. Unless, of course, you are way over leveraged. All right, so the S&P is down big. It's down 46 freaking points. Today's expected move on the SPX, just the daily expected move, was $23. So the options market was pricing in that the S&P 500 would move down or up $23 today from yesterday's close. And it is down almost 50 points. So it is down big. It's a pretty big move. And the NASDAQ is down bigger. Like the NASDAQ is down some couple hundred points now. If this gets, yeah, it's down over 300 points. That's a pretty decent move. And the volume is heavy. It's got heavy volume. A lot of sell side activity. A lot of sell side activity. Where you been? Haven't you done a what? You haven't done a live since Bitcoin was probably at forward. No, I just didn't do any live streams last week. The week before last, we did 2 of them. Yeah, we generally do it on Tuesdays and Thursdays. But sometimes, like I said, I run into internet connection problems, and then there's no point in even wasting your guys' time when that's the issue. But yeah, I mean, everything's good. I'm pretty sure Bitcoin was well above. Well, I did a live stream for the channel members Sunday. So obviously Bitcoin was well above $40,000. Yeah, dude, we've done live stream. We would live stream through this. We live stream through this. So, I mean, yeah. And we've been bullish on Bitcoin ever since it's been above the yearly opening range. If you can remember when we were trading over in here, I was like, I want to see it start to get bullish pretty damn soon, or I'm going to flip my hat to the bearish side of the ring if we drop back under the early opening range. As long as we stay above that, then I am bullish. Right? So like if you were unable to buy the yearly opening range, you could have bought the breakout or the close of this day, which was a legit breakout. You swept all the highs and closed above all the highs. That's typically a good sign. And the moving average structure was bullish still. See? Your moving averages were still structured bullish through here. So whenever the moving average is structured bullish, that's going to be my overall trend bias always. Always, always, always. And I told you, like, if I think that a trend is over, I really don't get super bearish on something until it breaches below its 21 exponential on the weekly. And you can see Bitcoin is a very long way from doing that. Very long way of doing that. I do believe it is massively overbought, right? It's been overbought since October 23rd, 2023. It's been overbought. It needed to cool down. We just didn't get it. I thought we would, because every year since or prior to the halving, anytime it got overbought, it would have a pullback. It didn't do it this year. And that has to be attributed to the ETF approval, right? That's the only thing that this run could be attributed to. Essentially that, or the fact that risk has been so super bullish. I mean, there you go. Just look how bullish this thing is, right? Like, I posted a tweet not too long ago saying this thing moves 18 weeks. of upside. And in those 18 weeks, you only had 2 weeks that closed red. Out of 18 weeks, only 2 of them were red. That is, I can't find another period in time where that happened, ever, on the S&P. I've went back and looked all over, and there's nowhere that I can find where you had that big of a move to the upside with just 2 red weeks in 18 weeks. It's crazy. So obviously risk is on, and Bitcoin gets traded as a risk on asset. It absolutely does. Absolutely does. Or it has in the past. It could change in the future, but in the past it has. Gold pulling back a little bit here. It's massively overbought, but I did think gold would break this all-time high. If it wasn't today, maybe tomorrow. Especially if we get dollar breakdown. The dollar is currently trying to break down from support, but the dollar's just been testing this support at 103.78 for a long time. But you have not been able to close the daily candle under it. Will today be the day? I don't know. And then you still got 2023's yearly opening range right under it as well. So obviously a bearish dollar would help gold to break out, but gold can still move up even if the dollar moves up. Because if you look at gold, gold's been moving up 1, 2, 3, 4, 5 consecutive days. The dollar has not been moving down for 5 consecutive days, right? As a matter of fact, for the first 2 days of those 5 days, it was bullish. So gold can trade up with the dollar. It's just, you know, once you start getting around all-time highs, you got people that will take profits. They just will. That's just the way it is. Bitcoin is now down 4%. But it could find support. So if you still think it's going to make a run higher, if you think that it is not overbought yet, and this is not going to be the pullback, then you're going to wait for a support to be formed, and then you're going to look to buy that support. Right? But it does have a little bit of momentum. Things are getting volatile. This one candle right here is almost a $6,000 move. So you can see we've hit 69.3. We're down to 648. So big moves. People can get hurt really, really badly in this situation. So stay risk averse. Make sure you're only risking 1% on each individual trade. You never want to risk more than that, ever. But most people don't trade crypto like that, do they? They go all in with 100x leverage, and then they complain when they get stopped out. But yeah, I mean, it looks like it's coming off pretty good. But it don't mean it will continue. You just have to watch support levels. If they keep getting broken, then maybe we could say something has changed. You could watch the 4-hour, the moving average structure on the 4-hour. It's not going to give you perfect signals, obviously, because right here you would have been bearish. But, you know, it is what it is. I didn't think it would go this high, to be honest with you. I thought it would pull back a long time ago, but I thought the S&Ps were going to pull back a long time ago as well, and they did not. And NVIDIA still does not look bad on the day. So if NVIDIA were to come collapsing down, you're going to see the S&P down much bigger than it actually is. Much bigger. See, I mean, this thing it's not even collapsing yet. If it starts to collapse, then the S&Ps are coming off. But I think I don't think you have any. I mean, the market knows everything that it needs to know right now. I mean, what if the Fed says something different in tomorrow's, whenever it goes to testify, then maybe the market will do something different. And the market could just be simply pulling back based on that, right? Because everybody would probably think that it would be bearish. We do know that rate hike or rate cuts are not coming at least until June. And if oil continues to rise, which, we don't know that it's going to. There was a problem loading this tool. Why? Boop doop boop. So yeah, June, July. Oh, see, the market is now saying that they will be a rate cut in June, but not before, because that's May. So we got a March and a May meeting coming up and the market's anticipating no cuts, none, not until June. And then it's just a 54% chance. It's not a guarantee. But we'll see. We'll see. I think this thing has to break. I think it's literally carrying the entire market. I truly believe that. Also, another big thing that's keeping the market up is financials. Oh my God. The financial sector is just ripping, and it's still ripping. It's not back up at all-time highs yet, but it's close. And this is going to be based on JP Morgan, Wells Fargo. We could go look. Yeah, the regional banking ETF is doing pretty okay today. But here's JP Morgan. I flipped it, switched too quick. JP Morgan just insane run. On the weekly, it's probably going to look worse than the S&P, and it does. It looks worse. $18 bars, and of all those 18 bars, only one of them closed red. Like, that is insane. Insane. All-time highs. So this is a huge reason also why S&Ps are up. The financials collapse and Nvidia collapses, the S&P's done. And we can look at the equal weighted S&P. Ooh, it's almost about to make fresh all-time highs. So the equal weighted ETF for the S&P 500 is looking good. So the breadth looks good. Breadth looks good. 2 weeks of bearishness as well. 18 weeks. So it's getting close. It's getting close to a time to be a pullback. Do I have the IWM in here? I do. This thing looks good. It looks like it wants to do a pullback. But it did have a legit breakout, and that breakout got sold off. So we have to be careful right in here. If it can find support around 203 or 202, I still like this to the upside. That first attempt is usually a false attempt, right? Drag every breakout trader in the world over here, get them long, and then crush their hopes and their dreams, and then break out. So we'll see if it does or not. But if you look at this on a line chart, it's primed. That's a long time of consolidation here. So a breakout above this area here, the next area we'd be looking for resistance would be 212.04 on the IWM. And for the simple fact that this hasn't made all-time highs is why a lot of people are still bearish. Because they're looking at this as more of a breath indicator than the actual RSP. Which I don't think you can do that because the stocks that are inside of this thing have such a small market cap, and there's a lot of them that aren't even profitable, right? There's a lot of SPACs inside of the IWM that are still not profitable. But, if it could get going to the upside, I think there would be a good opportunity there to make a couple bucks. But it looks good. It's just can it maintain this breakout, or is it going to get swatted right back down? Gogoplex just found you. Great stuff. Thanks, Drew Holiday. Just heard on the news that Bitcoin hits all-time highs, but only use it by criminal activity, and it's going to zero. Yeah. Right? That's funny. That's very funny. What's up, Sloth Bag? We're fortunate for any time you're willing to give us, brother. Yeah. Hey, I do my best. Look at December 1994. Okay. On what? The S&Ps? You must be talking about that. Yeah, let's give it a look-see. Yeah, almost, bro, but there's three. 1, 2, 3. Almost. I mean, that's a doji and that's a doji as well, but they still closed down. So in the same period, 18 weeks from the bullish candle from the breakout. But yeah, I mean, it did continue there, didn't it? For a long time. Even after. So great point out. Yeah. My gosh. And it hit overbought about the same time as well and stayed overbought for, oh my God, like what, 2 years? Almost 2 years. But then just continued to move higher forever until 01. Good find. Good find. Good stuff. Yeah, got it. Thank you so much for that. What is your opinion on rate cuts? People think it's bullish, but it's actually crash markets every time it's happened. It depends on the speed and the rate at which they cut. Like if they just do, 3 25 basis point rate hikes this year, I do not think that will be bearish. But at the same time, I mean, this is the thing about like macro stuff like that. Sometimes it works and sometimes it doesn't. It's the same as technical analysis. There's really nothing like standardized that's going to tell you that we're going to see a bear market or that we're not. There's a quote that people should live by, and it's more money has been lost on trying to time corrections than corrections themselves. So basically, what that means is essentially more people have lost money trying to beat or time a correction or a bear market. They've lost money, more money doing that than they would have lost had they just stayed long throughout the bear market. So, I mean, timing the market is difficult. I mean, we do it on this channel all the time, obviously, especially because we're intraday traders, but we don't always get it right. The reason that we stay consistently profitable is because we understand how to manage risk. We don't let our losers go too big. We don't let our, we don't let our risk go way out of control. We keep our risk within a 1% loss. That way, if we're wrong, we bounce out of the trade, and then we just, we keep taking them, keep taking them, keep taking them. And eventually you're going to get one that's going to be so right that it's going to wipe out all those losers. That's essentially how you become profitable in trading. You really don't need to know much technical analysis or fundamental analysis at all to be profitable in this business. It's when you try to get too cute with this stuff is typically when you start losing money. It's like, yeah. So just manage your risk, right? If you're gonna do YOLO option plays, like put plays or call plays on YOLO earnings plays, just make sure that you're only risking 1% of your total portfolio's equity. And understand that if you're doing 0-day to expiration options, that option's going to be completely worthless. Completely worthless. So make sure you buy a strike that you will only risk 1% of your money. And eventually you will get one, maybe. You know what I mean? The problem with those kind of trades, though, is you're buying high implied volatility. So you could be right on direction and still lose money. Say you buy a put on stock, right? We'll call it stock, and it's got an IV of 190%, right? 190% on the IV, and then you go way out of the money and say, you're gonna buy the 49.20 strike, okay? It could fall all the way to here, and you're still going to lose 100% of your money, even though you were right on direction. Because this IV the very next day got cut down to 100 or worse, down to 70, right? Yeah. And that's why you lose money. You lose money not based on the directional play, but based on the IV lossage and the time decay. So just be careful. When we take a trade on options, we're generally using spreads, because it caps the amount you can make, but it also caps the amount you can lose. It's just not been a good year for spreads to the upside because of the skew. The bullish, the skew on calls it doesn't work for call spreads, or it makes them more expensive with less upside. You can only make the amount of the width of the spread minus the premium paid. That's how a spread works. So if you go $5 wide, $5 is the max money you can make on a trade. So if you spend $1.50 on the trade, $3.50 is all you can make. But the problem with skew, when it's up real high, it makes it to where you can't get that $5 wide spread for $150. They cost $220 or $240 or $270, and then that makes the call spread not worth it. And for small accounts especially, it's hard to manage a 1% risk on the SPY or the IWM even. because it's just they move way too fast. But if we could get the skew back down, which might happen now that the VIX is going up. No, it's still at 145. It's still high. We need it under 130. Yeah, VIX is up 4% today, which no kidding, right? I mean, you're always going to get those pops on the VIX, but even though the VIX has been rising, so has the S&P 500. That's also weird. I mean, there is a clear trend line there moving up, and it has been since December 2023. It should be moving the opposite direction. It should be flat to down, but it's not. That's because people are buying the VIX and they're selling calls because they're not certain about the future, right? Because yields are still very high, especially the near-term yields. The near-term yields are still very much higher than the long-term. So that means your yield curve inversions are still very much inverted. Like, I mean, seeing where this is, that's the 10-year 3-month, and then here's the 10-year 2-year. Seeing these inversions and where they're at, it almost looks as if that we're never ever going to get uninverted. Which, in my opinion, or as far as the data I can get, it's never happened before. I mean, eventually they may get uninverted, but obviously the Fed is going to have to cut rates for that to happen. And then, the market could sell off. Because, typically everybody knows that the 10-year 3-month is like almost has 100% hit rate for calling recessions. But you got to have 2 negative quarters of GDP plus a bunch of other things have to be, under certain parameters before the NBER will even call a recession. So we would literally be in a recession before the NBER says we're in a recession. And then the NBER will go back and say it probably started here. By that time, the market's already going to sniff that out. So I mean, there's a 50-50 chance that rate cuts will not be bullish. It could be bearish, simply for the fact that the markets have already priced them in. I know the NASDAQ is down big on the day. It's down huge. It's down 300 points. I don't think we've seen a 300-point day on the NASDAQ in a while. But it's not terrible either, right? That's still not a nasty candle. That would be a nasty candle. That would be nasty. Let's go over here real quick and see what PayPal's doing. Oh yeah, that trade should have been taken. Son of a bitch. It's just I can't take shorts at support. Just too hard to do it. But you'd be up nice on that trade. As it is now red on the day. It was at 0.5% when I told you, when we were looking at it. It was in here. A $60 strike, you would still not be 2 strikes in the money yet. But under this white line, you will be. It's too late to take it now because it could bounce from here. This is weekly support. But if the SPX continues to collapse today, then I would say this will go lower. Even the gold stocks are pulling back some. Bitcoin pulling back, but I mean it's not crashing. You still haven't taken out yesterday's low. Right? Yesterday was a big candle. Like I wouldn't be concerned about this unless, like I said, you get some ugly, nasty candle. Right, something that looks like that. That would be ugly. But we have to wait and see. Wait and see. I think it might not be done yet. Ooh, I don't know if I want to sell puts on the SPX either, especially even if we do breach the bottom edge of the expected move. And this is the bottom edge of the expected move, 50.73. So we get down there and breach that. I mean, what do we do? Do we sell puts way down here maybe? We could. Or give it one more day. See how the market reacts to the actual event itself, which is going to be at 10 o'clock. I don't know how long it's going to be, but we also get jolts tomorrow as well. And crude inventories. And they're going to be watching oil. The problem is we have a lot of oil. The U.S. can always sell oil. The U.S. can manipulate oil prices easily. That's why the CPI dropped so hard. All right, let's see. Any other questions? Oh, what's up, Michael? Bitcoin is off 5% for the first time since 1 hour ago. Right? Good morning, my bro. We'll probably not reinvert. I mean, it should, but it doesn't look like it's anywhere close to doing it. They're going to have to cut rates for that to happen. Once they start cutting rates, then it should invert or get uninverted. But we'll see. Only time will tell. But if oil continues up, like I said, there's a huge chance that they might not want to cut rates based on the fact that inflation is staying sticky. They want 2%, not 3%. Only time will tell. Similar to QE when it kicked off, we just keep the yield curve inverted and they don't cut rates. Instead, they find creative ways to pump money into targeted areas of the economy. Yeah, they could potentially do that too, but they're in debt so much right now. It seems almost as if they can't keep. I mean, the Fed has even said they can't stay on this fiscal path, or nothing they do is going to help. So yeah, we'll see how they play it out. Any broker recommendation that includes indice equities and Forex? Haven't enjoyed Oanda much. Well, tastytrade will allow you to trade indice, equities, and Forex, but I think Charles Schwab will too. I know Thinkorswim did, but you could still trade Forex with Tasty, but you have to be futures approved because you won't be trading Euro USD. You'll be trading the actual Euro futures, which would be like, where's that? Right here. This is the Euro contract, right? So you would just go to grid and pull that up. What is it? /6E Euro FX futures. And this is essentially Euro dollar. You can see that it's priced pretty much the same, right? $1.08. If we go over here to Euro USD, you're going to see it's priced at $1.08. So yeah, you could trade it that way. The problem with this is it's expensive, right? Just to buy one contract would require at least $2,300 worth of buying power in your account. What you would need more than that, because you don't want to, like, if you only have $2,300 in your account, the brokerage probably won't allow you to trade it because of margin. You'll be too close to margin. So you would need like 3,500 in the account to trade one contract of the Euro futures. But you could check with Schwab. I mean, they probably trade FX. You can pull up FX charts on Thinkorswim. And this is now Charles Schwab's platform, but you can absolutely pull it up. I don't remember how. Let's just try this. All right, so it'd be /USD. There you go. So Euro /USD. And I'm not exactly sure. I never really traded FX on Thinkorswim. I always just did it on Oanda. But yeah, it also depends on where you are in the world, I guess. What are you doing? Depends on where you are in the world. The reason I liked Oanda was simply so I could trade right off of this platform here. But yeah. Using TradeStation, E-Trade, and Stockpile for equities. Damn, you got a lot of accounts. I agree with that as well, Mr. Michael, or Fair Free Digital. Yeah, they do tell some fibs. You're in Texas. Awesome. Yeah. No, you're fine. The basic questions are easy to answer. You're fine. Don't ever apologize for asking questions, because if you don't ask the question, you won't get the answer. And don't be afraid that your question is too stupid, because there are people that's never traded before a day in their life. They don't know the difference between a stock and a rock. You know what I'm saying? So those are the important questions, because those are the questions that get you on the right track. I've always just used Oanda for Forex trading. Since the dollar's been garbage the last 3 weeks, it's been difficult to find a decent Forex trade. I was watching Euro yesterday when it was trading up into this resistance level, but I was thinking about shorting it, but I didn't like the fact that its structure is still bullish, right? Or more bullish than the dollar is bearish. Because the 50's above the 100, the 100's above the 200. You see that? So your 3 longer dated moving averages are seated correctly for bullish continuation. Now, it doesn't necessarily mean that it will continue, because moving averages don't do anything to help in a sideways choppy environment. They do help, though, in a trending environment. So if the euro is about to trend, obviously the easy play would have been to short resistance. But why short resistance when your bias is it's probably going to go higher? So I didn't ultimately take the trade, and it was a good trade not to take because it did close higher. And today we even moved higher. Now it is struggling, but that's just based on the dollar. FX has been sideways and choppy. However, London people that live in London or that are awake during the London session, they've been able to get trades off because, the London session, calls the high and low of the markets a lot of times. For instance, we go into today, just look at today's candle alone. Right here, Alt V. So forget everything except for these candles on the screen. All right, that's your close and open. Well, this would be the open of the daily range. It trades down to what? The London session at 3 a.m. literally set the low of day. Up it goes. You see what I'm saying? And that happens a lot. That's why I tell people not to trade during the Asian session, because the Asian session is definitely going to get stopped out, either by the London session or the New York session. One or the other. The Asian session is likely to get stopped out. Now, of course, that'll be different if you have a strong trending day and it just opens and goes, right? Occasionally you'll get those daily range expansions where you just short the Asian open and it ends up going straight down and continues straight down for the entire day's range. But that doesn't happen often. Most of the time you get this. You'll get the first move, which will be wrong, and then your London session will come in and set the low of day, and then price will trade away from that. And that's exactly what happened. So if I'm coming into the office here, it's a difficult trade to make. Because daily res is holding, but I also have to keep in mind that they bought it in London. So the trade literally would have been along today at that area right there, which we know as intraday demand. And it would have had to been taken at 7 o'clock in the morning once it got back above. And then you could have simply put your stop under that candle or the low of day. And you could have caught the move. But that's how almost every single day works. Almost every single day, that's what happens. The Londoners are lucky when it comes to FX. Very lucky, because this happens a lot. Doesn't happen all the time. But there's been many times where I've just not been able to sleep or whatnot. Come to the office, turn on get all the monitors fired up, see what time it is. Oh, it's getting ready to be 3 o'clock. See what happens. If we're at the high of day, I'm going to go ahead and short it. If we're at the low of day, I'm going to go ahead and buy it and catch winning trades that way. But it doesn't always work at 2 or 3 o'clock. Sometimes it'll happen at 1. Sometimes it'll happen at 4. It is what it is. But that 3 o'clock candle, in my opinion, is most of the time where you're going to either get real close to setting the low. 2 o'clock is the actual open for us East Coasterners. Like, I live on the East Coast. You live on the west or Central Time probably. So it would probably be 1 a.m. for you. This candle would be 1 a.m. for you. But this 2 o'clock and this 3 o'clock candle for me, that's the London Open, and then the hour after. So that's usually when the majority of the volume comes in and kicks this baby right on up or down. London sessions are strong, but it doesn't always work, right? I'd say probably 65% of the time it does. Not every day, but as long as you're risking 1%, that is a strategy all in itself. FX is simple to trade if you live in London. And I do have a couple of people that live in London, so they're up early and they're looking for trades. But the dollar has just been god awful. It's not trending. It's sideways, caught in this chopped range. Makes it very difficult to trade. But this is a daily support that I'm watching, and then obviously the yearly opening range is right here. So, I mean, if it's going to hold support, I want to see it hold here or here. If it don't, then I'm going to start looking for shorts on the dollar. Because this structure is more bearish than bullish, right? The purple's your 200, the blue's the 100, the red is the 200 simple, and then the green's the 50. So if this were structured more bullish, you would want the purple being on the bottom, then the blue, then the green. Even in this tight of a space. So the way I read this is, since the 200 is still the top moving average, I don't really care about the 21 because it's such a fast moving average. Of course, it's going to rip right through all of them, right? In just a few days. It's these slower ones right here that are more important to me. So this structure to me still looks more of bearish overall than bullish. So like, and we're finally getting that breakdown on the 50 there. But the way I look at it is literally all of this has just been one big bull trap. Because it did break above the 200 and stayed above the 200 for a long time. But ultimately, it could not get bullish continuation away from it. Therefore, this moving average structure is probably going to be in play in the future. And we're probably going to be looking to short the dollar lower. But some people disagree on, the macro view on the dollar. People think the dollar is going to bid, especially if the market rolls over. And, obviously that can happen. So we'll just have to wait and see. But it's definitely not been an easy trade. Even in all of this garbage right in here, just nothing but like 2-3 weeks of chop. Then we finally got our breakout move. We thought we were looking for bullish entries, and then it just melted right back into the chop slop. Looking at this on a monthly time frame, you've literally been trading inside of November and December's candle. Both of those candles. You're stuck inside of those two candles, these two candles here. For continuation, we need it to go lower or higher. Like this. This is continuation. This is trend. This is not trend. This is 100% chop. Sideways. AF. Yeah, you broke down and out, but still, you're still in the middle. You broke out, then you broke down. But now you're still stuck in the middle. Just, sideways. Disgusting. Sell calls up there, sell puts down here is the best way to trade this strategy. You can sell options on futures as well. Looking at the Euro USD, it's going to look similar. Just choppy, man. Disgusting. I don't have enough buying power in my small account to sell calls and puts, but that's the way to do this. You just sell your call above 112, sell your puts above 104, long ways out, collect the premium, and just wait till it starts trending once again. When things are trending, it's easy to trade. You just wait for a pullback into support or resistance and take the opposite. Thanks for streaming. He will take as much time from you as we can. I've told my friends about the stream and they're tuning in today. Please give a shout out to my friend Bukaki. What's up, Bukaki? Bukaki. All right. I might be getting trolled there, but if not, oh well, it's okay. Either way, thanks, Victor. I'm in the same boat. I keep waiting for DXY to break this 14-month. Yeah. Yep. Me too. It's a choppy range. That's why I've been focusing more on like Bitcoin, obviously. Bitcoin's been trending. Bitcoin's been a decent, easy trade. And then some stocks. A lot of stocks, actually. But they haven't been working out that much either. This is one that we missed. We were looking to get long, but we just missed it. That was a great trade. Obviously, I wouldn't have held it through earnings, but still, damn, right? This is an energy play, but it has to break outside of this range. Inside of this range, it's garbage. It's thinking. Well, anyways, this is a consolidation range here, so anywhere back down into this area, I'll be looking to buy it. Or, at the middle, it just depends on what oil does. If oil continues to be bullish, then I'll buy it. If it don't, then we may sell it. Ford was a long, but it broke down and stayed below support for 2 days. And I said, forget about it. And then this day happened and I was like beating my head off the table because I'm also trying to give these trades out to people inside the Discord. So you can imagine my disgust when I'm like, yep, get ready. Nope, never mind. We broke down. It's over. And then boop, right back out. Trap. Well, we should have just bought it here anyways. We'd be up a few cents. McDonald's was a short. I got in it too early. I got in it here and needed to wait for it to get to resistance. But its structure was bullish, so I didn't love it. But you can see resistance held. This would have been the time for the short. Put on a put spread or just buy an outright put. And down it went. Meta, obviously, Intel, we discussed. And a lot of these haven't worked. Win worked out. XHB worked out. Intel worked out for 3 days, but it was hard for me to buy it. This was a breakout trade. Obviously, it's still going. Win was a long down here, but it's coming back, so I don't know about that. Nike was a short. Now this trade we did make money on because we took it here, closed it here. Then it went back up, traded sideways, ultimately rolled right back over. Feb, March. So even if I would have held it, probably would have got stopped out. Procter & Gamble is another one that could be a potential long, but I mean, its structure is long, its structure is bullish. But now overall, there's the macro market now is going to come into play with this. But this is a long-term consolidation range as well. It just doesn't look like it when you got it pulled in tight. When you look at it like this, you can see a clear range-bound consolidation. I think breakouts work better on stocks than like FX and futures and Forex and all that, where you get a lot of, sideways trade anyways. SQ we were watching, Square we were watching for Bitcoin, but ultimately Bitcoin's crashing or coming off from the highs, so Square's dropping back down in the range. I don't know if I'd buy it now. In phase energy, this is, I don't know. I like this one lower. We'll let it consolidate a little while longer. It's got earnings coming up in April. It just had earnings though, so that's probably wrong. It looks like price action is starting to give way to structure, and structure is bearish. Now, if it breaks out above 137.34 and gets bullish continuation, then that trend would change. We would be looking for bullish trades. But as long as it stays under 137, preferably 126, we could look for shorts. Because this thing is bearish, right? And Zoom is just garbage, and yeah. Although I think Zoom did get a nice pop, but it's going right back down. It's just trading in an overall huge range still. And then all of these, we already know what's up. So yeah, that's that. Now, how often do you change your bed sheets? My girl changes them and washes them quite frequently. Yeah, Bukaki is a legend for sure. All right, we're going to go ahead and wrap it up, guys. If you guys got any other questions, go ahead and get them in the chat now. Bitcoin is putting a little bit more downside continuation on the chart. So it does look like it is looking to go down to yesterday's open at least. Coming off pretty hard. If we look at the 4-hour, you're going to see that. Yeah, coming off pretty hard now. So all-time highs before the halving and then collapse. No, I'm not saying that. I'm just saying that's what it did so far today. Damn, it's starting to get ugly. Everyone panic? No, don't panic. This could literally just be a lot of profit taking going on. Imagine all the people that got bullish last year, or not last year. Jesus, it's been a long time ago by now, but seems like last year to me. All the people that bought up here and held, right? Because they did. A lot of people did. A lot of people wrote all this out and hated YouTubers, and they were never ever going to tune back in and screw everybody, because now I lost over half of my money. Those people are belling. You know what I mean? They're like, hell yeah, I got my money back. I'm getting out of this garbage. And then obviously you're going to have new shorts that are just going to stack up above last year's all-time high, because they're trying to pick the top. Will they be right? Only time will tell. Only time will tell. This is just also the 5th day of a new month. So there's no reason to panic. Not yet. This is a monthly candle, so that could be the high of the month, but we could close the month right in this area in here. That wouldn't be nothing. It would be nothing. It just matters the question is, is Bitcoin having going to work the way that it has in the past? That's the question that needs to be answered, and only time will tell, because the halving is right here. We're in March, April, boom. Then we go through the halving. Once the halving happens, we could get a little sidewaysness like we did here, and then go. And then that would be insane, because then we'd be looking at insane prices. 80,000, 90,000 even. We'll see. But overall, the chart still looks good. If you put this on log, dude, this chart goes from bottom left to top right. That is a bullish chart. It is a bullish asset. And that's one thing that I've always maintained about this asset. As bad as you love it or as bad as you hate it, the structure and the chart is bullish. You get periods of corrections that last for a long time, but then you get bull markets after. Usually happens after the halving, but this year it happened to happen before the halving, which is odd. It's never happened before. So a lot of people are going to be changing up the way they view the 4-year market cycles. I guarantee it. For sure now. There was a period that we were looking over here real quick, and then I'll wrap it up. We were looking at the BLX, I think, on this chart. Yeah, it still didn't make all-time highs either, though. But it was balling going into the halving too, right? Like I said, it didn't make all-time highs, but it was definitely balling going into the halving. Then you had a sharp pullback, a couple weeks of sideways to up, and then another sharp correction, and then sayonara. See you later, homie. So, I mean, there's a bunch of things that could still happen. This thing could definitely pull back, get a bounce, pull back, and then boom, later. We'll see. We'll see. All right. As long as everything goes correctly, the Market Cowboy will be live again Thursday morning. Maybe a little earlier, maybe a little later. I'm going to try to stagger the times where I'm not live, where everybody's favorite crypto YouTuber is live at the same exact time. You know what I mean? Because most people will catch the replay. But, later's better because most of the time we've already got a good look at what the market's going to do. Unfortunately, later also means probably not many live setups, but we could have taken that PayPal trade. We should have taken that PayPal trade. But anyways, Thursday morning, sometime before or around the market open, as long as everything goes all right. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.